13th of June 2025, a 12-day conflict between Israel and Iran sent shockwaves through global oil markets. Crude oil prices shot up to 24% from end May levels, but never crossed $80 a barrel. Why was that? The conflict began as a preemptive strike by Israel on Iranian nuclear, military, and infrastructure targets. However, the US joined in later in support of Israel targeting Iranian nuclear enrichment sites. Broad markets feared escalation of the conflict, and energy markets feared that Iran would close the Strait of Hormuz, through which more than 20% of global oil was flowing. Any disruption to Iran's crude oil exports of 1.5 to 2 million barrels per day would place further upward pressure on crude prices. However, crude did not breach $80 a barrel due to US's tactical strike during the weekend when oil markets were shut. OPEC Plus had already started reversing its voluntary production cuts from earlier, and markets realized that OPEC Plus countries had a spare capacity of nearly 6 million barrels per day. Markets also felt that the US would increase supply if crude prices moved closer to $80 a barrel on a sustained basis. Further, May and June witnessed Saudi Arabia increasingly step in with additional crude supply as its strategy saw a shift to market share from that of price. Iran continued to produce all through the conflict, and any disruption fears were offset by Saudi Arabia's increasing supply. Saudi's move will surely help US keep inflation in control and further help the US government push the Fed for more rate cuts. Keeping crude supplies low would also mean helping reduce support for Russian war efforts. So, where the additional supply of crude comes from and why matters a great deal for crude prices, especially during the current backdrop of uncertainty. The Fed's next policy is slated for end July, and August would be crucial as the Fed reviews its monetary policy and thinks aloud on the way ahead for rates and regulation. For India, crude prices, as always, shape everything from bond yields to fiscal math. One strong and sustained price swing can really change fortunes for India.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.